All right, welcome back, everyone. Let's get right into the stock market technical analysis. We're going to look at the charts looking for profitable trade ideas. Guys, drop me a thumbs up as I go along if you're finding value in the content. If you're interested in learning this as a skill set, check out my technical analysis course, link in the description below. Finally, if you're interested in being a private member and getting additional market insights and trade ideas, link in the description below on that one as well. Okay, so today I'm going to start off with Apple. Just a couple things. Just really want to point out what I'm seeing in the charts and what I'm looking for. On Apple, you've got this daily chart. We have a bearish rising wedge right here. We've just been kind of moving higher, consolidating within that wedge. That's a bearish pattern where you're typically going to break to the downside. And we also have negative divergence, confirmed negative divergence, helping us know that the probability to break to the downside is very likely. Momentum has been dropping off on the PPO and the RSI, and we've been just building within this bearish rising wedge pattern. So we should break to the downside. The largest part of the wedge right now is about right there, and I don't think this wedge actually the wedge does extend out. Sorry, I didn't have it marked. So here, the largest part of the wedge is really right there, and that really sets us up for a move. Right there would be about the measured target of about 138. Okay, that's the measured target of a breakdown of this wedge, and I do think that's very likely. From where we're at right now, that is a drop of about 16% or so. That's what I'm expecting in Apple, at least in the near term. Another thing I'm really noticing, if I zoom in on the PPO right here, you can see we had the bearish crossover in the past. It was really right there, and then they started to turn it up, making it look like it was going to cross back, but then so far today pointed back down and just getting rejected. So it just helps to firm up the confirmed negative divergence. We're at really the kind of the apex of this wedge. I'm thinking we're going to break here relatively soon. Now we do have earnings coming up next in early May. It looks like we've got earnings, so 2 weeks from now. Maybe what happens, because I don't know if we can stay within this wedge for the next 2 weeks. It's always possible, but what I would think maybe is going to happen is we're going to break down from the wedge, something like that, and then earnings will come out and they'll pump earnings for a back test, something like that, maybe a back test after earnings, and then probably a continuation to the downside. Just a hypothetical, because obviously none of that has happened, but just something to look for if you see. Until then, we are at support. All right, you can see right here all the tags. There's another one, and right in there, pretty much at support. So nothing's been, we haven't broken down yet. We don't have that confirmed sell signal in Apple. The other thing to notice, if you roll out, since the bear market started back in December of 2021, really in Apple, we have been in a downtrend, and there's no difference here. This is right there at resistance, big resistance. It's marked by that blue trend line. And so, yeah, I'm looking for that breakdown. And ultimately the breakdown of this trend line right here on the daily. So we'll just continue to watch it. Do we get it? I don't think we're going to get it today. We'll probably get it, next week sometime. Okay, real quick, guys. I will be doing a live stream tomorrow morning, typically around 9:15 Pacific time. So if you're interested, feel free to join in and look for that live stream. Amazon. All right, so Amazon today, they're pumping Amazon. It's kind of like whack-a-mole with these things. Typically, all the FANGs are down, but Amazon's up. And then when Amazon's down, some of the other FANGs rise up. It's just very, it just looks like topping price action to me. Amazon is popping above the 200-day moving average. And, I don't think it's going to hold. I suspect they'll sell it down and it will close at or below the 200-day simple moving average today, by the end of today. We also have this island reversal candlestick, and we've really kind of, this is about as high as you want to go to keep that island reversal as a reversal candlestick. So I suspect this is probably the end of the road for the rally in Amazon, and we're going to roll down. We've got earnings next week, next Thursday it looks like. And so, yeah, I suspect they'll probably sell it down, and ultimately, we'll start to move lower from here. So something to look for. The one thing about Amazon that's a little different is no negative divergence here on the daily. You can see we kind of have lower momentum, but then if you're taking it off this candle here, we've got lower price there. So lower price, lower momentum. It's not a divergence. So, you know, I don't know. There is a potential trend line I've kind of got marked out. It's not the cleanest, but we've got some reactions here. So maybe it could pop up and hit that trend line. If you did that anytime soon, that would put in that negative divergence there on Amazon. The only thing is it would kind of negate this reversal candle right there. So little bit mixed read on the Amazon. Let's move on. Google. So we'll go to GOOGL. And again, negative divergence. So we've got, you know, these highs right here were divergent highs, meaning you've got lower momentum than previously. And we've really gone nowhere for the last month or so, at least a couple weeks. So looking for this to start to roll over with the rest of the market, and especially tech. No real change in Microsoft, obviously, since, you know, for the multiple weeks. So likely not going to be decided by the end of today. Meta, so Meta, I've got this kind of bearish rising wedge right here, but you can see I'm kind of missing those candlesticks right in there, and I have to kind of undercut those or overcut them or whatever in order to line up this candle right there. So what I'm going to do is just adjust this, because as of right now, as you zoom in, you can see we're starting to break down out of the wedge, but it's not impulsive. So that tells me that we're not actually breaking that wedge. So if I just adjust this candle right there like that, that will now capture those reactions right there. So we've got the low, we've got those reactions, and we'll have kind of the price action where we're at right now. So we're going to keep that as our bearish rising wedge pattern. Full negative divergence intact, bearish rising wedge, just not a breakdown yet. Again, I want to see impulsive selling. So these FANGs are likely just holding up into earnings. We've got earnings coming out next week, and then Apple the following week. So they're not going to likely break down too much, or if they do, then we might get back tests, kind of spike ups on the actual earnings report. So something to look for. Semiconductors, SOXX, you can see here, daily chart, support, 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 and kind of some reactions there. And we're starting to break down, all right? We are actually drifting, nothing really impulsive, but definitely starting to drift lower and break this wedge. So it's you know, we're at the point now where I think we should start to see that impulsive selling. It's likely going to take till next week, probably till those initial FANG earnings come out. But yeah, we're starting to break down. The negative divergence has been intact, telling me that, okay, we're likely at the top and we're going to start to roll down. Again, I have a lot of doubters, and that's kind of what this price action does. This topping chop, it traps bulls essentially. At the end of the day, if we start to roll over, then everybody who is long here will realize that they were, you know, not positioned correctly, and they'll become sellers. So that's what I'm anticipating. The charts are telling me that's likely to happen, so we'll stick with the trade. NVIDIA, let's go ahead and look at this one. NVIDIA, again, I know the other day I had someone comment that they lost 10 years worth of private membership monthly charges based on this little 3% gap up. Look, if that's true and you can't take that, you're too heavy in the position. I talk about that in my course. Position sizing is key. But again, I view this as, look, we had a bearish rising wedge. We have negative divergence, fully confirmed. We broke, and we're just chopping around. And sure enough, that little pop that they did on that you know, that day where it was up about 3.5%, that's been completely faded. All right, and we're back down here now. So that's it, guys. We're not going up. We're just kind of chopping around, topping, likely just kind of floating around and waiting for those earnings to come out. Okay, gold. So really, I just want to look at the gold miners, GDX. You can see here we have daily chart. We have some support. It was former resistance about 33.43. Okay, and sure enough, there's this bearish rising wedge. And we broke and headed right down to that first level of support. So I think you're probably going to bounce here. You know, maybe a bounce next week. I wouldn't expect it to just kind of crash right down through there. I think there's too many reactions on the daily chart that there would make sense that you're going to have some buyers step in right here. So I could definitely see a bounce up, you know, I don't know exactly how high, but probably, you know, you could probably get a 4 or 5% bounce roughly. And then maybe we'll just sell back down. Okay, so the way this works is you run down, you hit support, you probably bounce, and then come back down, and likely going to break. And I'm kind of mixed on this one. I don't have a strong indication on whether this is going to go a whole lot lower. I mean, if you're a bull, here, then this is basically support right here, okay? That was former resistance, and now it's support. So makes sense to buy here, or at least to go long for that bounce. And SMAR, haven't covered this one for a while, but again, still short. I haven't changed my opinion on it. We talked about this. You've got this bearish rising wedge. You had a breakdown, back test, and sure enough, from that back test right in there, the sellers have just been drifting this thing lower. We're continuing to trend lower over time. You just have to stick with the trade. As long as it's working, we just stick with the trade. And sure enough, this thing is continuing to work. And if you took the short, let's say you shorted it anywhere here, you're pretty much profitable. It's continuing to drift lower. So again, I think we will continue lower. There's a gap to fill down here. So you're probably going to get a reaction down at this gap. But my ultimate target, at least in the near term, or, I've got a big gap way down here at 32.89. So I like that level. And I also like this level at 35.51. Both of those are pretty good support. And so those are my targets. I don't know how long it'll take, but again, I think we're probably going to go like this. Fill this gap, bounce, roll down, hit it, probably bounce, and then ultimately hit that. Okay, guys, really quick video. I don't have a whole lot else, so I'm going to just go ahead and get this video out. Today's not really a whole lot going on. Nothing technically has changed pretty much all week, so get the video out, and I'll catch you on the live stream tomorrow. Take care.